For more than 4 decades, one name defined the personal computer more than any other: Intel, the company that put the x86 in nearly every desktop and laptop on the planet. The company whose Intel Inside jingle became one of the most recognized sounds in advertising history. The company that, for a very long time, simply had no real competition worth worrying about. But walk into any tech forum today, scroll through any hardware subreddit, or watch any benchmark comparison video, and you will find a very different story being told. A story of missed deadlines, delayed node transitions, disappointing product launches, and a stock price that has been bleeding for years. So the question on everyone's mind is simple, but the answer is anything but. Is Intel finally losing the CPU war? And if it is, how did the most dominant chipmaker in history end up here? To understand where Intel stands today, you have to understand how completely it once ruled this industry. Through the 1990s and 2000s, Intel wasn't just winning the CPU market, it was the CPU market. AMD existed, sure, and occasionally landed a punch, like the Athlon 64 era in the mid-2000s. But Intel always had the resources, the fabrication technology, and the sheer scale to absorb any hit and come back stronger. Intel's TikTok strategy, where they alternated between shrinking the manufacturing process and redesigning the architecture, was the envy of the entire semiconductor world. Other chip companies could only dream of the kind of manufacturing lead Intel enjoyed for the better part of 2 decades. When you bought a laptop, you checked for an Intel sticker the way you might check for a certification mark. It meant quality, it meant performance, it meant you were buying into the industry standard. Then came the 14 nanometer problem. Around 2015, Intel found itself stuck. The jump to 10 nanometer manufacturing, which should have taken a couple of years, instead took the better part of 5. Chip after chip kept getting released on the same aging 14 nanometer process, refined and re-refined until the well seemed to run dry. Consumers started noticing that generational improvements were shrinking. Where a new Intel chip once meant a genuine leap in performance, it started meaning a 5 to 10% bump and a new marketing name. This delay might sound like a small technical hiccup, but in the semiconductor industry, timing is everything. While Intel was stuck fighting its own manufacturing process, the rest of the industry kept moving. And that opening was exactly what a struggling competitor needed. Enter AMD. Back in 2017, few people took AMD's Ryzen launch seriously. AMD had spent years producing chips that were, frankly, uncompetitive. The bulldozer architecture era was rough, to put it kindly, but under new leadership, AMD made a bet that would completely reshape the industry. They partnered with TSMC, the Taiwanese foundry giant, instead of trying to compete with Intel's in-house manufacturing. This decision effectively let AMD outsource its biggest headache. While Intel struggled to shrink its own transistors, AMD simply rode on TSMC's node improvements. Ryzen, and later Ryzen with its chiplet design, allowed AMD to pack more cores into its processors at a lower cost than Intel could manage. Multi-core performance, which used to be an area where Intel could comfortably claim leadership, quietly became AMD's strongest selling point. By the time Ryzen 3000 series arrived in 2019, built on TSMC's 7 nanometer process, AMD wasn't just competitive anymore. In several workloads, it was outright winning. Intel's response was, for a long time, surprisingly slow. Instead of aggressively cutting prices or accelerating its roadmap, Intel leaned heavily on its existing customer relationships with laptop manufacturers and enterprise clients. For years, that strategy worked well enough to keep market share numbers looking reasonably healthy, even as enthusiast sentiment shifted hard toward AMD. But market share and mind share are 2 very different things, and mind share has real lasting consequences. Once a company loses its reputation as the default best choice, it becomes much harder to justify a premium price. And Intel had built its entire business model around premium pricing. It's also worth remembering that this isn't the first time Intel has stumbled badly and still managed to recover, at least on some fronts. Back in the mid-2000s, when AMD's Athlon 64 chips were genuinely outperforming Intel's Pentium 4 lineup, plenty of analysts wondered whether Intel's dominance was permanently over. Intel responded with the Core architecture in 2006, a genuine engineering triumph that reset the competitive balance almost overnight, and kept AMD on the back foot for the better part of a decade. That history matters here, because it shows Intel is capable of dramatic turnarounds when its engineering culture is firing on all cylinders. The question this time is whether the scale of the current challenge, spanning manufacturing, architecture, and entirely new competitors, is simply too large for a single architectural reset to fix. Intel's missteps haven't been confined to the CPU market either, and it's worth zooming out to appreciate just how many adjacent battles the company has lost over the years. Remember Intel's attempt to break into the smartphone chip market with its Atom processors? Billions of dollars were poured into subsidizing Atom-powered phones and tablets in a desperate bid to compete with ARM-based chips from Qualcomm and Samsung. The initiative was eventually abandoned as a costly failure, and Intel essentially ceded the entire mobile computing revolution to ARM-based competitors. That decision looks even worse in hindsight now that ARM architecture is creeping into laptops and even data centers, markets Intel once considered untouchable. Similarly, Intel's forays into discrete graphics with the Arc series have been a mixed bag at best, arriving years later than promised and struggling to match NVIDIA and AMD in both performance and driver stability, even as gaming GPUs and AI accelerators became some of the most profitable products in the entire semiconductor industry. Speaking of artificial intelligence, this is perhaps the most painful front in Intel's current struggles. The AI boom that began accelerating dramatically in 2023 has minted NVIDIA as the most valuable semiconductor company in the world, largely on the back of its data center GPUs powering the training of massive language models. Intel, meanwhile, has struggled to carve out a meaningful position in this gold rush. Its Gaudi AI accelerators, acquired through the Habana Labs purchase, have seen limited adoption compared to NVIDIA's dominant CUDA ecosystem. While Intel has talked up its Xeon processors as complementary infrastructure for AI workloads and continues developing next-generation AI chips, it is largely watched from the sidelines as NVIDIA, and to a lesser extent AMD, captured the most lucrative growth market in modern computing history. Missing the AI wave this badly, at a moment when the entire tech industry is reorganizing itself around artificial intelligence infrastructure, may end up being remembered as an even costlier mistake than losing ground to AMD in traditional CPUs. Then there's the elephant in the room that many people forget to mention when discussing Intel's struggles: Apple. In 2020, Apple announced it would transition its entire Mac lineup away from Intel processors to its own custom-designed Apple Silicon, built on ARM architecture. This wasn't just a customer loss, though losing Apple as a customer certainly stung. It was a symbolic gut punch. Apple had used Intel chips since 2006, in a deal that was seen at the time as validation of Intel's dominance. The switch to Apple Silicon proved something the industry had suspected but hadn't fully confirmed. x86 was no longer automatically the best choice for performance and efficiency. The M1 chip and its successors delivered performance per watt numbers that made traditional laptop chips look wasteful by comparison. Suddenly, ARM wasn't just a mobile phone architecture anymore. It was a legitimate threat to Intel's entire business model. And it wasn't just Apple exploring alternatives. Qualcomm, NVIDIA, and even Microsoft have been pushing hard into ARM-based computing for Windows machines. Qualcomm's Snapdragon X series chips, launched with heavy backing from Microsoft as part of its Copilot Plus PC initiative, are specifically designed to challenge Intel and AMD on their home turf, the Windows laptop market. These chips promise all-day battery life and strong efficiency, areas where x86 chips have traditionally struggled compared to their ARM-based mobile cousins. While it's still early days for ARM on Windows, and compatibility issues remain a real hurdle, the direction of travel is clear. The comfortable x86 duopoly that Intel and AMD have enjoyed for decades is no longer guaranteed protection from outside disruption. Now let's talk about manufacturing, because this is really the heart of Intel's crisis. For most of its history, Intel's greatest strength was that it designed and manufactured its own chips in-house. This vertical integration meant tighter control over quality, timing, and innovation. But when Intel's manufacturing arm fell behind, that same vertical integration became a liability instead of an advantage. Competitors like AMD, freed from the burden of owning fabs, could simply shop around for the best available manufacturing technology. Meanwhile, Intel was stuck trying to fix its own foundries, while also trying to design competitive chips, essentially fighting a two-front war with limited resources. Under CEO Pat Gelsinger, who took over in 2021, Intel launched an ambitious plan called IDM 2.0, promising to fix its manufacturing woes and even open its foundries to outside customers, directly competing with TSMC and Samsung in the foundry business. Gelsinger promised what he called 5 nodes in 4 years, an aggressive roadmap meant to leapfrog Intel back to process leadership. It was a bold, almost desperate bet, essentially betting the company's future on regaining a manufacturing edge that had taken years to lose. Progress has been made. Intel 4 and Intel 3 processes have shipped in real products. The upcoming 18A process, which Intel considers critical to regaining competitiveness, has been the subject of enormous investment and enormous scrutiny. But investors have grown impatient, and the financial reality has been brutal. Massive capital expenditures on new fabs in Arizona, Ohio, and Germany have strained Intel's balance sheet at a time when revenue from its core business has been under pressure. The financial numbers tell their own uncomfortable story. Intel has reported billions of dollars in losses in recent quarters, something that would have been unthinkable for the company just a decade ago. Layoffs have hit tens of thousands of employees. The dividend, once a reliable signal of financial health that income investors relied on, was slashed dramatically. Gelsinger himself was ultimately pushed out as CEO in late 2024, replaced eventually by new leadership tasked with steering the company through what can only be described as an existential crisis. When a company that once defined an entire industry starts cutting its workforce, cutting its dividend, and cycling through leadership changes, it's hard to argue that everything is fine. But let's be fair to Intel here, because declaring the company dead would be premature and honestly a little lazy. Intel still commands a massive share of the global CPU market, particularly in enterprise data centers and the broader laptop market, where relationships with manufacturers like Dell, HP, and Lenovo run deep and don't change overnight. Intel's latest consumer chips, while not always class-leading in every benchmark, remain perfectly competitive for the vast majority of everyday users who aren't obsessing over frame rates or rendering times. In the data center, while AMD's EPYC processors have made significant inroads and NVIDIA's AI dominance has stolen headlines, Intel's Xeon lineup still generates substantial revenue and maintains relationships with major cloud providers that took decades to build. There's also the geopolitical angle that can't be ignored. Governments in the United States and Europe have strong strategic interests in maintaining domestic chip manufacturing capability, especially given how concentrated advanced chip production has become in Taiwan. The CHIPS Act in the United States funneled billions of dollars toward Intel specifically because policymakers recognize that having a credible American semiconductor manufacturer matters for national security, not just market competition. This kind of government backing gives Intel a cushion that a purely market-driven company might not enjoy, buying time for its manufacturing turnaround to actually pay off. It's worth taking a moment to actually look at how recent Intel product launches have been received, because reputation in the tech world is built launch by launch, review by review. Meteor Lake, Intel's mobile-focused chip launched in late 2023, was actually a fairly significant architectural shift, introducing a tile-based chiplet-style design and dedicated AI acceleration hardware called the NPU. Reviewers generally praised its efficiency gains, a clear sign Intel was listening to the lessons Apple Silicon had taught the industry about performance per watt. But then came Arrow Lake on the desktop side in late 2024, and the reception was considerably rockier. Despite architectural improvements and a move to newer manufacturing nodes, many reviewers noted that gaming performance actually regressed compared to the previous generation in a number of titles, a genuinely embarrassing outcome for a brand new flagship launch. Forums lit up with confusion and frustration, and even loyal Intel customers started openly asking what exactly they were paying a premium for. When your newest, most expensive chip loses to your own older chip in benchmark after benchmark, it doesn't matter how much marketing spin you put on efficiency gains, the headlines write themselves and they weren't kind. Compare that to AMD's trajectory over the same period. The X3D lineup, which stacks additional cache directly onto the processor die to dramatically boost gaming performance, has become something close to the default recommendation for enthusiast gaming builds. Reviewers and system builders alike now routinely suggest Ryzen X3D chips over Intel's competing offerings for anyone prioritizing frame rates, a complete reversal of the assumptions that dominated PC building for the better part of 2 decades. On the professional and content creation side, AMD's Threadripper lineup has also carved out serious territory in workstation markets that used to be uncontested Intel Xeon territory. None of this means Intel products are bad in an absolute sense. Plenty of Intel chips still deliver perfectly solid performance for everyday tasks, productivity work, and even casual gaming. But in the battle for the enthusiast mindshare that shapes broader market perception, Intel has been losing ground consistently, launch after launch, for years now. There's also a cultural dimension to this story that doesn't get discussed enough. For decades, Intel operated with something close to institutional certainty about its own superiority. Engineers, executives, and even marketing teams inside the company grew accustomed to being the standard everyone else measured themselves against. That kind of deeply embedded confidence can be a powerful motivator, but it can also breed complacency, a reluctance to take the kind of aggressive risks that scrappier competitors are forced to take simply to survive. AMD, by contrast, spent years on the brink of financial collapse in the early 2010s, at one point trading as a penny stock, with serious questions about whether the company would survive at all. That near-death experience arguably forced a level of organizational discipline and risk tolerance that Intel, cushioned by decades of dominance, simply never had to develop. Turning around a culture like that isn't just about hiring the right engineers or building the right fab. It requires a fundamental shift in how an organization thinks about its own place in the world, and those shifts tend to take years, sometimes even a decade or more, to fully take root. Investors understandably have not been patient while waiting for that cultural shift to play out. Intel's stock price has dropped dramatically from its highs, wiping out tens of billions of dollars in market capitalization and prompting serious questions from Wall Street about the company's long-term strategy. Some analysts have even floated the idea of splitting Intel's design and manufacturing businesses into two separate companies, arguing that trying to be both a competitive chip designer and a competitive foundry simultaneously may simply be an impossible balancing act in the modern semiconductor landscape. Others argue that keeping design and manufacturing under one roof is precisely what gives Intel its long-term differentiation potential once the foundry business matures. This debate isn't just academic chatter. It reflects genuine uncertainty at the highest levels about what Intel's core identity should even be going forward, whether it wants to primarily be a product company competing with AMD and NVIDIA, or a manufacturing powerhouse competing with TSMC and Samsung, or somehow both at once. So where does this leave us? Is Intel losing the CPU war? The honest answer is nuanced and depends heavily on which battlefield you're looking at. In pure desktop enthusiast performance, AMD has clearly seized the crown in many segments, particularly with its X3D chips dominating gaming benchmarks. In efficient, high-performance laptop computing, Apple Silicon has redefined what's possible, and ARM-based Windows machines are beginning to chip away at long-held assumptions about what a laptop chip needs to look like. In manufacturing leadership, Intel is still playing catch-up to TSMC, though the gap may be narrowing if 18A delivers on its promises. In sheer market share and enterprise relationships, Intel remains a giant, even a wounded one. What's undeniable is that the era of unquestioned Intel dominance is over. The company can no longer coast on brand recognition and manufacturing scale alone. It has to actually compete on merit, on price, on performance, and on efficiency, in a way it hasn't had to for most of its corporate history. That's a genuinely difficult adjustment for any organization, let alone one as large and bureaucratically entrenched as Intel. Culture change at that scale doesn't happen overnight, and Intel's competitors have shown no signs of slowing down while Intel figures itself out. It's also worth considering what a genuine Intel recovery would actually look like in practice, because winning the CPU war doesn't necessarily mean returning to the kind of total dominance the company enjoyed in the 2000s. That era of near total market control may simply be structurally impossible to recreate, now that TSMC exists as a mature, world-class foundry any competitor can tap into, and now that ARM has proven itself as a legitimate alternative architecture across laptops, servers, and beyond. A more realistic version of success for Intel probably looks like durable, credible competitiveness across desktop, laptop, and data center segments, paired with a foundry business that attracts a handful of serious external customers willing to trust Intel with their most advanced chip designs. That would be enough to stabilize the company financially, rebuild investor confidence, and restore at least some of the mindshare it has lost over the past decade. It wouldn't necessarily mean AMD, Apple, and the ARM ecosystem retreat back into irrelevance, because those competitors aren't going anywhere either. The next 2 to 3 years will likely determine Intel's fate for a generation. If 18A delivers genuine process leadership as promised, and if Intel's foundry business manages to attract serious external customers, the company has a real path back toward relevance and even renewed dominance. Semiconductor history has shown that leads can be reclaimed, though rarely quickly and never easily. But if 18A stumbles the way 10 nanometer did, if costs keep spiraling while losses mount, and if AMD, Apple, and the ARM ecosystem keep gaining ground, Intel risks becoming a cautionary tale, remembered as the company that once ruled computing and let its own complacency and its own manufacturing missteps cost it the crown. Is Intel finally losing the CPU war? Right now, it's more accurate to say Intel is fighting the hardest battle of its corporate life, against opponents who are stronger, faster, and hungrier than at any point in the company's history. Whether Intel wins that battle depends on execution, on discipline, and honestly, on a bit of luck over the next few critical years. The empire hasn't fallen yet, but for the first time in a very long time, it's no longer guaranteed to stand. And that uncertainty alone tells you everything about how much this industry has changed. A decade ago, this video wouldn't have needed to exist, because the answer would have been obvious to anyone paying attention. The fact that we're even asking the question seriously, backed by real benchmarks, real financial losses, and real customer defections, is itself the most telling evidence of just how far the balance of power in the CPU industry has shifted over these past several years. What do you think? Can Intel claw its way back to the top, or has the CPU war already been decided in everyone else's favor? Drop your thoughts in the comments below. And if you enjoyed this breakdown of one of tech's biggest ongoing rivalries, make sure to subscribe for more deep dives like this one. Thanks so much for watching, and I will absolutely, truly see you in the very next video.